Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hey everybody, welcome to tonight's video. Let's go ahead and just jump right into it. There's a lot to go over, and I'm not feeling super great, so we're going to try to make this short. And yeah, all right, so daily time frame. A couple things I want you to focus on here is that the 5-day moving average has essentially climbed right to where we're at. Okay, we closed at the 772.49. The 5 MA is currently at the 771.58. So very neutral level, okay? And this basically means that we did not get a break from this range, like many were expecting with the CPI. I don't know if I talked about this in yesterday's video, but I know I did talk about it in the post that I wrote last night. I do write a pretty lengthy post each and every evening. But this CPI might have been priced in, and the reason why is because vast majority of investors and traders were expecting the CPI to come in cooler. Many people probably loaded up on calls prior to the actual CPI report. So that could have been heavily priced in, which is based on what I'm looking at today, um, with the high and the low, it does seem to be that's what the price action gave to us. But what I really want everybody to focus on here is that the volume has still been descending. Okay, that's not a good thing. Usually that's a bearish move. Um, each time you start seeing the volume descending like this, what do you start seeing after that? Heavy selling. Descending volume, selling. Descending volume, potentially selling. Okay, so potentially we're going to start getting ready to break this range to the downside. Now, it is a little too soon to say that, but we are starting to get up to the point where we do need to retest our 10-day moving average. Well, our 10-day moving average is currently at the 764.54. We'll be probably at the 765 around there, maybe a little higher, come open today, tomorrow, whenever you're listening to this. So I think that's going to be the next level that the market's likely going to start pushing towards. We also see the ADL. The ADL is starting to pull downward, meaning there's less money flowing into the SPY. So that is not a bullish signal either. Now, jumping into some of the smaller time frames here, let's go ahead and jump to the 15-minute time frame just to see what the price action for today was. I know many were expecting this cup and handle to form, but we actually see a little bit of a breakdown of this handle. However, it doesn't get rejected until we fully close this range to the downside. Okay. And the reason why that won't be rejected until we get to that point is because that's the bottom of that cup. And as long as the bottom of that cup is still persistent, still, available, this can still form a handle. However, there's some structure I do want you to focus on here. Is this head and shoulders. Now this head and shoulders hasn't pushed us down yet, but it absolutely has the ability to push us down. And what are some of our lower supports looking like here? Let's go to some of the longer time frames. We have a major support at the 768. We have a major support at the 758. Okay, now I don't think we're going to get that 758 anytime soon. But if we do the retest that 10-day moving average and we have a rejection from that range, we could possibly land at that 758. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. But one thing I do want everybody to focus on is that we have started to form this consolidation channel. I talked about in yesterday's video, probably the day before as well, is that if the CPI does not cause a very large move to the upside or a very large move to the downside, then it's very, very likely that we're going to be seeing this consolidation channel forming. Now, we still have the PPI data tomorrow, okay? And that can always cause the market to rally or break down. However, as long as we're stuck in this consolidation channel, the expectation should be to essentially trade from the top, bottom, top, bottom, top, bottom, top, bottom, until we break that range. Now, the best example of this, and let me pull it up. It's been a while since I've seen this chart, so you will have to forgive me if the lines and everything are drawn crazy, but it's on NVIDIA, where NVIDIA, let's go to the weekly. Oh, I guess I deleted that channel. NVIDIA was within this very, very large consolidation channel. Basically within these two ranges right here. We had the bottom of the channel and the top of the channel, which I want to put in white just to solidify that. And we traded between this range for roughly, let's see, almost a year straight. Okay, now I'm not saying this is what's going to happen on the SPY, so don't freak out. But some of these consolidation channels can be very persistent. So if we're at a range where buyers are slowing down, but sellers aren't really, kicking in at this point, because we have seen that in the past where we're at a level where sellers don't want to sell their stocks. We're almost at basically all-time high levels. But the buyers aren't stepping up either. Potentially every time we start pulling down this channel, maybe we see the buyers step up. Potentially every time we get to the top of the channel, we start seeing the sellers starting to trim positions and selling a little bit. So we will have to see how this channel plays out. But one thing to remember is that buying always usually leads into consolidation. Consolidation always leads into either buying or selling. Okay. Um, the market's either moving upward or downward, or it's moving sideways. Currently, we're seeing a lot of that sideways movement. Do I think that tomorrow's data set will really change that too much? Personally, I don't think so. We do have an important earnings in the after hours though, which is Applied Materials, AMAT, and we have seen Applied Materials definitely move the market quite a bit. So we do have the potential between the cooler CPI that we got today, the reduced chance of a rate hike, which is very, very heavily skewed right now. I believe it's very close to that 60-40% right now, where 60% is the chance of keeping the monetary policy, held slash paused, and 40% of the hike. And every time we get a cooler data set, that's going to continue shifting to a higher odds of the held rate slash pause. Okay, which that's bullish for the market. Okay, that absolutely has the ability to break us from this range. Now, one thing that I haven't discussed is that we can see another buying channel occur from this current consolidation channel. If we do have a break upward, potentially we can see an extension of this buying channel. Okay, we have seen that in the past as well. But right now it is a little too soon, and we do have some bearish structure going on. So as long as that's persistent holding, then I think that very, very likely we need to start looking at some of these lower supports. That's 770.20, that's 768.04. And if we lose those levels, then we could start looking to that 758.11. But we have to remember as well that this consolidation channel line acts as a support as well. Okay, so that's going to be near the 767 50-ish range. I don't have the exact number on the dot here. And the top of the channel, of course, is going to be basically the all-time high. So those are kind of my expectations. I do expect this head and shoulders to play out. even if we do get a cooler PPI tomorrow, I think that the structure is pretty solidified. We technically do have, let me draw it out, technically do have this inverse cup and handle forming as well. Okay, so that absolutely can take form. But on the bullish side, okay, we still have this cup formed. We still can turn this upward and create a handle. It would be extended out further due to the trading session being right there. But, we're still in between structures. But I think this head and shoulders is pretty strong. And just based off of everything I've been seeing, I do think that we will try to test the downside a little bit from this range. So that's my expectation. That's the next day analysis. Sorry for the shorter video, but I will talk to you in tomorrow's video. Thank you so much for watching. Take care and trade safe, everybody. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.